Hello, everyone, and welcome. My name is Kostantsa Rangelova. I'm Global Electricity Analyst at Ember, and it is my pleasure to chair today's webinar. We are here to launch the annual slide deck from Kingsmill Bond and the Ember Futures team on the Electrotech Revolution, the most significant transformation in the global energy system since humanity moved from firewood to fossil fuels. And today we are shifting from burning molecules to harnessing electrons faster than many have ever imagined, reshaping both energy economics and geopolitics. Now, we have a fantastic lineup of speakers and just 1 hour together. So let's dive straight in. Please do add all of your questions in the Q&A tool. You will find it at the bottom of your Zoom window, and we'll address how many as we can at the panel discussion section of this webinar. Now, without any further ado, I would like to introduce Kingsmill Bond, Director for the Ember Futures team. Kingsmill joined Ember from RMI in 2025 to lead a new strategic initiative focusing on the disruptive force of Electrotech. And now I give the floor to Kingsmill to share with us a distilled version of the Futures team's annual slide deck, showing us around 40 out of the more than 100 slides published today on the Electrotech Revolution. Over to you, Kingsmill.
Fantastic. Thank you very much, Annie. And welcome, folks. I'm going to speak first today, and I hope we'll be handing over to Nigel Topping to give his perspective on the situation for the UK. So my job is to talk about what we mean by the Electrotech Revolution, and then hand over to our excellent speakers to discuss some of the implications for Asia. But first, I want to make the 30-second elevator pitch for those who don't stay on any longer. So we're moving fast to a better energy system. It's powered by Electrotech, such as solar, batteries, and electrification. It's driven at heart by efficiency, cost, and energy security. And it's impacting now as Electrotech supplies all of the growth. And it's going to lead to cheaper local energy. And the real question, folks, that we should be asking ourselves is, how do we join the party? Okay, so I'm going to scoot through, as Annie says, a fairly long presentation quite rapidly. But before I do so, I see Nigel Topping has joined. So I'm going to hand back to Nigel to set the scene, Nigel, if that's okay. And I will I'll come back to the UK. Sorry, I'll come back to the global pitch in a minute. It's perfect timing.
Great. Well, thank you, Kingsmill. Thank you, everyone. Apologies, I'm running from one thing to the next. First of all, I wanted to look. I'm really looking forward to the presentation. I think Kingsmill and Sam and the Ember team always do fantastic work, and there's some really important insights that they're sharing here. And it's not just the technical insights; it's also the way that they're framed in a global context. I think this comes at a time which is very resonant to the situation in the UK. You know, we've just earlier this year provided the advice to government for the 7th carbon budget, which takes us through to 2042, and then in June we gave our annual progress report as the Climate Change Committee to the government on the progress they're making. And there's just a couple of factoids from the UK situation that I want to share, which I think maybe a lot of people on this webinar understand, but in my experience talking to people around the country and talking to decision makers, not many of them do. And Kingsman, I think you're going to illustrate this in a global level much better than I do. But it's for example, we've already reduced power sector emissions by 85% in the UK, and so power is now the 6th biggest emitting sector. It seems a lot of people still think it's because it's talked about so much. It's not actually. The biggest emitting sector is road transport, then domestic buildings, and then industry. In fact, those 3 sectors account for 7 times more emissions than the power sector. And what's the solution? Electrification. So Kingsmill's point, the focus on making sure we're not just obsessing about the power. Of course, we need a lot more power. We need to 2.5 times as much power by 2050, and that needs to be clean. But it's the build out of the scale of power that's becoming the bigger challenge than the decarbonisation. So I think that uh, uh, I just wanted to really applaud the breadth and the clarity of the work that the team's done here, and just invite everybody to take the subtlety of some of the arguments about the implications in terms of pathways, focus, um, uh, and deploy them in whatever work you're doing. I'm certainly finding it resonates very well with the work. I've just been doing a lot of media at Kingsmill, having taken over as the chair of the Climate Change Committee recently, so I'm regularly pointing out now at this point that it's scale of the power sector and electrification on the demand side that are the real issues. So I think all of us who are advocating for the growth of the clean economy need to equip ourselves with the tools that Kingsmill's about to give us to make sure that we can articulate the common sense journey that we're on, and rebut some of the non-common sense arguments that are thrown to try and derail progress. So it's a very timely, very well thought out, and it's going to be very useful for me, and I think for all of you who are listening, in whatever role you have in accelerating the clean tech revolution. So Electrotech it is. Kingsmill, over to you.
Fantastic. Thank you very much, Nigel, for the kind endorsement and support. So, okay, so there's a brilliant segue into. There are 6 things I want to talk about today, folks. So, first, what is the Electrotech Revolution, and how does it differ to orthodox thinking on the energy system? And then I'm going to look at the evidence for the rapid growth of Electrotech.
Hi, Kingsmill. I think you need to reshare your slides. Can you try again? Because we are seeing something else.
1 second, folks. Let's try again. Is that working, Annie?
Yes, excellent.
Okay. Sorry, everybody. We are highly trained professionals. Anyway, okay, second section is about, third section about peaking fossil demand. And then I'm going to look at the barriers to change. What are the fundamental, there are some barriers to change. What are the fundamental drivers to change in spite of the many barriers? Then talk through what it means when you change your energy system, the kind of profound impact of the transition, and then conclude with some thoughts on what we do about this transition. Okay, so where does Electrotech fit in? There are 2 standard views today on the energy system, and both are normative. You start from where you want to get to and you work backwards. So you have the incumbent view presented here in the chart from the US EIA. It's really just a fossil fuel wish list. It's very popular at present in the US and the petrostates for obvious reasons, and you will see a bit of it in the forthcoming IEA current policy scenario. There's a bit of renewable growth, but nothing to worry about because fossil demand will keep growing for the foreseeable future. And that's the orthodox fossil view. Then the second one is the climate view from the IPCC, where we need to set targets and curb emissions, and only that way can we reach net zero. And it kind of focuses on morality and COP and carbon capture. And then there's the third view, the Electrotech view. Here, for example, from Rystad, which argues that we're shifting to a better energy system powered by renewables and electrification. And our argument is a very simple empirical argument that this third view is far closer to reality than the other 2 normative scenarios. So what exactly is Electrotech? As the name suggests, is at heart better energy technology on learning curves centered on electrons. And there are 3 key streams within it. So you've got the generation of electricity, that's solar and wind. You've got the use of electricity, EVs, heat pumps, and industrial electrification. And then you have this other clever bit of all the stuff in the middle, which links supply and demand. So That's batteries, but it's also AI, it's software, it's demand side management, it's HVDC lines, and all of them myriad innovations which are making it possible to link supply and demand of electricity. And whilst this appears to be a fairly complex chart, so my dear colleagues tell me, all we're really trying to say, folks, is that Electrotech is the child of digital tech. Similar people, similar technologies, similar locations, and similar trajectories of falling costs and rising growth. As these technologies come together, a century of evolution is coming into a decade of revolution. Or to put this in more poetic terms, we're moving from burning our very limited resources of fossilized sunshine to using sunshine in real time. Because the solar resource, let us not forget, is enormous. There are lots of ways to describe it, but remember that every 5 days we get from the sun as much energy as total fossil fuel reserves could provide for the rest of time. So however you want to cut it, there's a huge amount of resource that we can tap into. Okay, let me start in slightly more prosaic terms. How does Electrotech impact the current energy system? And there are two main vectors of change, as many people have noted before. So you have renewables supplying electricity in the left-hand side of this little chart, and then the electrification of end demand as that electricity moves to the right. So there are two primary vectors of change in the energy system. And the real question is, how are we doing in these two races? And I'm going to run through this kind of summary of how far we've already come in the Electrotech story quite rapidly, because much of this is very well appreciated. And there are three parts. I want to talk about the growth in supply, connections and demand. Then I want to talk about growth by region and conclude by looking at where is the ceiling of the possible nowadays. So the first driver of change, as so often in technology revolutions, is cost. The cost of Electrotech's on learning curves, it keeps falling around 20% for every doubling in deployment. If you go back 20 or 30 years, you've got 99% falls in some of these costs, for example. But the point simply is that it's now cheaper than fossil fuels in a rising number of sectors and countries. So we're not suggesting it's everywhere in every sector, but it's a rising number of sectors and countries where this stuff is cheaper than the incumbents. So for example, the BYD Dolphin car in China costs around less than $10,000. The solar plus storage in India is coming in at below $40 per megawatt hour. These are numbers that you can never compete with in the incumbent fossil system. And as a result, Electrotech is growing very rapidly. Again, to start with generation, there are lots of ways to look at the solar and wind story, but to take just this one, solar deployment's doubling every 3 years. And it was going to become the largest source of generation capacity this year. Look at that, coming from nowhere 15 years ago to be the largest source of generation capacity, with over 700 gigawatts of new capacity this year. Connection technologies are also rising extremely rapidly. The most famous is battery storage, which is doubling roughly every year at present. But there's a lot going on in lots of other areas as well. You've got high voltage transmission capacity up tenfold in a decade. There's 1 billion smart meters out there. Here in the UK, Octopus has created 2 gigawatts of flexible EV capacity. It's about the same as a nuclear power station in just 2 years through software. So there's an extraordinary amount of innovation going on in the connection space. And then in the usage space, again, EVs, of course, the poster child. Electrification has been growing in buildings and industry for a century. It's now more than half of useful energy in both of those two sectors. And now the transport sector's joining the party, finally and belatedly. So you've got exponential growth going on in two-wheelers and cars and trucks and charging points, all over the world. If we look at it from a country perspective, it's widely appreciated that China is moving extremely rapidly in terms of solar and wind generation, electrification, and EV cars. But what is less well appreciated is that there's an amazing story also going on in the emerging markets. There is an emerging market energy leapfrog to a better energy system. And two observations to illustrate this. First of all, nearly 2/3 of emerging markets by demand have leapfrogged the United States in terms of solar as a share of generation. So from Chile to Mexico, from South Africa to India, the peoples of the Sun Belt are harnessing the sun. It's not entirely surprising. Secondly, a quarter of emerging markets have also leapfrogged the US and Europe for that matter in terms of electrification. And here there's a very strong bias to Asia. Think, for example, of Bangladesh and the Philippines, both at higher levels of electrification than the US. That's electricity as a share of final energy demand. And why are they doing it? They're doing it because they can. And just as we saw with mobile phones, the revolution is now moving to Africa, as pointed out recently by my brilliant colleague Dave Jones. In the last 12 months, African imports of solar panels are up by 60%. So this revolution is just cascading right across the world. The third great achievement of the last decade that I want to highlight is that the ceiling of the possible continues to rise. So there are lots of ways to integrate more solar and wind into your electricity generation. So from batteries to demand side management, smarter grids to flexible generation. And as a result, the leaders are at over 50% penetration of solar and wind. And as the Energy Transitions Commission recently noted, we know how to get to 70 to 80% at reasonable cost even now. So for most countries, all you have to do is follow the leaders. And this applies also to the second vector of change, which is electrification. At the start of the century, we knew perhaps how to electrify a quarter of our end-use demand. Now it's 3/4. We have electric cars, we have trucks, we have high-performance heat pumps, we have the electrification of low-temperature heat in Chinese industry, and we're starting to tackle the harder-to-solve sectors. So as a result of all of this, the ceiling of the possible for electrification and decarbonisation of electricity is far above our heads. The key challenge, in fact, for the energy sector today is to deploy existing cheaper Electrotech solutions into the vast hinterland of opportunity opened up by technology evolution for over the last couple of decades. Okay, let me move now to the question of a lot of growth going on, fair enough. Let me move now to the question of significance and peak fossil fuels. So the fossil folks, they love to argue that the growth of the new only adds to the system. The very boring and tired more and more and more argument, which we also hear more and more and more. It's simply wrong. So in sector after sector, country after country, the new first takes all of the growth and then it pushes out the old. I'm going to look at the sector story, then the country story, and then at China to illustrate the point. So to start with electricity, demand growth fluctuates, but it tends to be around 700 or 800 terawatt hours. Solar and wind grew last year, as this chart shows, by around 600 terawatt hours. Expectations are they will supply over 800 terawatt hours this year. So there's very little room left for fossil fuel growth in electricity generation. And to be clear, electricity has been 3/4 of the growth in fossil fuel demand since 2019 of total fossil fuel demand. So this really matters, this peaking moment that's coming in the electricity system. And it's a similar story in the second vector of change, the electrification of final energy demand. So as a result of efficiency and electrification, electricity is taking the growth in buildings, in industry, and in transport. So fossil demand's been on a plateau for industry since 2014, in buildings since 2018, and the peak for road transport, according to the IEA, was 2019, as electric vehicles supply all of the growth in energy demand in that space as well. And we often get skepticism about the idea that peak fossil fuels is in industrial demand is a real thing. So here's a little bit of Ember magic and detail, and it shows you how the growth of the new does push the old out. So you see in green rising electricity in all of these industrial sectors, and it's pushing out fossil fuels in one sector after the next. So in a third of sectors such as food or textiles on the left, or indeed most light industry, we're well beyond the peak of fossil fuel demand. In another 60%, we're kind of bouncing around on a plateau. There's only 6% of growth in the industrial sector is coming from sectors which are clearly still rising, such as construction. So I think an illustration of the wider point. moreover, on a country basis, most of the world, folks, is actually past peak fossil fuels. So if you take our framing of one country, one sector after the next, if I look, for example, at peak final fossil fuel demand, 2/3 of the world has already seen a peak, this chart on the right, and that includes China, for example, driven by peaking Chinese fossil in the industrial sector. And half the world has seen peak fossil demand for electricity, including the US, Mexico, and Turkey. And the big missing piece in the chart on the left is China. So that brings us very nicely to the brilliant report that Mui and his colleagues, including Sam from our team, put out last week, China and the central importance of China in the debate about fossil fuel demand. So on a net basis, nearly all the growth in fossil demand since 2018 has in fact come from China. So what happens there matters. It is in fact the pivot nation in the global fossil fuel system. And then this is directly taken from the piece they released last week. What we're now seeing is peaking fossil fuel demand in China. Final fossil demand, as I say, has been on a plateau for nearly a decade. But it's in the electricity system that we're seeing the first signs of a structural peak. Fossil demands are down around 2 or 3% so far this year. And as a result, emissions in China are already falling. And that means peak global fossil fuel demand. And it's going to be a bumpy plateau, of course. So we talked about this for many years, peak, plateau, and then decline. But we have come to the end of structural growth. Okay, let me now move a little bit to look at the future. So the facts of the case, a lot of growth, it's already causing peaking in the old system, but the counter argument we hear all the time is there are many barriers to change. And we think about this all the time. So you have inertia, incumbent lobbying, dysfunctional regulation, weak grids, and so on and so forth. So there's a huge number of barriers to change all across the world, all across every single one of these systems. But these barriers, they are not new. They have been with us for decades, and yet change continues to happen. So the question really is, why is that? What's going on which continues to overwhelm the specific barriers to change? And the answer is there are deeper tides of change which overcome the waves of resistance. And they are physics, economics, and geopolitics, or in more prosaic terms, efficiency, cost, and energy security. So let me start with physics. This is at heart an efficiency story. The fossil system is super inefficient. It wastes 2/3 of its primary energy. And Electrotech's about 2 or 3 times, about 3 times more efficient. Wind and solar are 2 or 3 times more efficient than fossils at making electricity. EV are 3 or 4 times more efficient at moving cars than ICEs. And heat pumps are 3 or 4 times more efficient than fossil fuel heating. So you have a massive efficiency gain as you shift into the Electrotech system. As for economics, Electrotech is a technology, not a commodity, so it has learning curves, and those learning curves will continue. That stands in contrast to fossil fuels, where the prices do not fall over time. And that means, folks, that Electrotech will continue to grow exponentially on S-curves. So we need to think about S-curves as usual, not business as usual. That's what a lot of the forecasting community gets wrong every single year. Just like other technologies before it, just like I set out in the beginning, it is the child of digital tech, so we should expect this. Entrepreneurs will continue to find ways around the barriers to change, so you should expect continued rapid growth in the system. And then finally, to turn to geopolitics, 3/4 of the world, folks, lives in fossil fuel importers. Over 50 countries import more than half their primary energy as fossil fuels. So if Putin or Trump decides to turn off the supply, the lights go out. That's a very high level of risk to bear in a world of rising fragility. And in contrast, every country has renewables. The renewable potential is 100 times larger than our current fossil fuel system. And furthermore, once you buy a solar panel, it's totally different to buying a barrel of oil. You buy the barrel of oil, you burn it, you have to buy another one the next day. You buy a solar panel, you stick it on your roof, and it lasts for 30 years. It's completely different degree of dependency. What that means is if you want energy security, you need to deploy Electrotech. And above all, you need, as Nigel said, you need to electrify end use demand. Meanwhile, China, of course, is deploying Electrotech at speed, and China's finding solutions to the barriers to change. And since Electrotech is cheaper than fossil tech, that gives China an inherent advantage that other countries over countries that do not deploy it. So the lesson is very simple. If you want to compete for the industries of the future, you have to join in the race to the top. Because if you don't, China is going to beat you to the punch. And we see this now right across the world. Chinese Electrotech is pouring into the emerging markets, from Pakistan to Ethiopia to Chile to Vietnam. The future is being built by people who lack fossils but do have access to cheap Electrotech solutions. So let me start to draw to a close, and then we're going to start to think about the wider implications of some of these arguments. So I want to look at where the energy system is going and what that means. And the first point is that Electrotech costs will keep falling. Now, we don't know by how fast, but we do know that there's plenty of new technologies coming down the pipe, and therefore very strong reasons to believe that costs will continue to fall. And we can model it here with learning curves and S-curves. You output this type of framework for the prices of the future technologies. And as I noted before, low costs are the universal solvent that make everything else possible. So solar and wind as a share of global generation will grow. Within a decade, they're going to be around half of global generation, which is basically where the leaders are today. And electricity as a share of final energy demand will also speed up. By 2035, the world will be around 30% electrified, which is actually where China is today, folks. This is not radical. It's just totally what's going to happen. And our detailed analysis is closest, for what it's worth here, to the IEA APS scenario. But the key point is that growth and change is going to keep on coming through in spite of the many barriers. The emerging market leapfrog will continue. Emerging markets are adopting solar and wind faster than developed markets did before them, which is not surprising because costs are lower, considerably lower, and a lot of the barriers to change have already been solved. So of course they're going to adopt this stuff more rapidly. And specifically Asia and Southeast Asia are leapfrogging the West in electrification, even as we speak in this chart on the right. And all of that growth in the new means that fossil fuel demand will enter into decline. And here we show the Rystad framing as an example for a couple of their scenarios which fit in with our wider analysis. Now, you can debate the detail in the chart on the right on the timing of the gas peak, for example, and the length of the plateau. But the direction of travel, particularly over decades, is extremely clear. You get this peak, plateau, and then decline framing for the current system. There are deeper implications beyond energy, of course. This huge new resource means new opportunities for growth in the countries of the global Sunbelt because they have the highest quality resources and will enjoy the cheapest electricity costs, as the ETC has recently shown us. This is, again, an extraordinary opportunity for deployment and fairness, and opportunity for the countries in the Sunbelt. It also means the disruption of the huge fossil fuel system. So you have an industry which is giant, it's tooled up for growth, it's got high fixed costs, and now, for the first time in its history, it faces decline. The rest is not rocket science. In the car sector, for example, ICE sales peaked in 2017 before anyone expected, and China came from nowhere to lead in car exports. This type of disruption is going to start happening across both fossil supply and demand sectors all over the world, and at speed, as we've already seen in the car sector. So in the concluding section, and I think I'm keeping more or less to time here, in the concluding section, what should you do? Well, the first point surely is do not sit on your laurels. This is the decade that everything happens, folks. We build the machines to make the machines. Solar goes up the steep part of the S-curve. Costs get too low to resist, and fossil demand enters into terminal decline in the pivot sector of electricity. The second point, and here I really want to speak to my friends in finance. Folks, please ditch the complex business as usual models, all those million factor models which are wrong year after year after year, and think harder about what's actually going on here. This is a spectacular growth opportunity. And it's not just BYD and Cattle and Tesla. It's Octopus and Schneider Electric and Siemens and countless other new companies which are arising to exploit the new opportunities which are materializing. And you also need to be ready to shoot the horse, as Warren Buffett says. There's a huge amount of stranded assets coming down the pipe as the fossil system winds down. Now, again, everyone's talking about, I was at a conference yesterday, everyone's talking about ESG is over. ESG may well be over. And again, in finance, we're good at changing. So we need to pivot from ESG to EST, energy system transition thinking. And to speak now to our friends in the Electrotech industry, I want to acknowledge this is not easy. Change never is easy. You've got inertia, you have lobbying, some governments are run by fossil fuel interests, competition, technology evolution, the challenge of China, and regulation tooled up for the old system. But you also have innovation, growth, opportunity, and glory. It's the same as the car sector after 1900, and just like them, most companies will fail, but the winners will succeed and will succeed big. And just three observations from the perspective of policymakers. I don't want to go beyond my brief here, particularly with Nigel in the room, who knows much more than I do. And I know it's very hard, but I think the first point surely is, as you alluded to, we need to think much harder about the second vector of change, which is electrification. And the West has essentially failed to electrify for a generation, and we're being leapfrogged by Asia. And what that means is you have to get electricity prices down. There's no room for excuses anymore. We have to use any tools at our disposal to get electricity prices down, not short-term fixes, but real solutions. And that means you need experimentation in policy just as much as you have experimentation in technology. I would suggest it's time to be bold with our policy leadership. And what happens if you do build out Electrotech? Well, you get a chance to curb emissions and reach the goals of the Paris Agreement. So there are very significant co-benefits of going down the route of the build out of these superior technologies. It's not just leadership and jobs and growth and GDP and opportunity. It's also the chance to live on a habitable planet, which would be nice. Okay, so my final slide to summarize, and then I'll hand back to Annie to continue the discussion more widely. We can harness the sun. The time is now. Change is unstoppable. It's going to happen faster than you think. So folks, it's time, as I say, to join the party. The Electrotech Revolution is a race. China has taken the lead, and Asia's catching up fast. So it's a fabulous moment. I envy my colleagues out there in China, India, and Southeast Asia. What a moment to be an Electrotech analyst in Asia. So I'm now going to hand back to Annie and our excellent Asian panel to address the question, what does all this mean for Asia? Thank you.
Thank you, Kingsmill, for this very energizing, I have to say, injection of common sense, to quote Nigel from just earlier. Now we will move on to the panel discussion part of this webinar. I have a few opening questions for our panelists before we go through the questions in the Q&A tool that have been piling up. And first up, we have here with us Mr. Assaad Razzouk, CEO of Gurin Energy, a renewable energy company based in Singapore that is developing, building, and operating renewable energy projects across Asia. You might also know him as the angry clean energy guy from his podcast. Now, Assaad, from your perspective, I'm very curious to know, as a clean energy entrepreneur and investor, how are markets shifting and how are businesses in Asia positioning themselves to really seize this opportunity of Electrotech? Do you see any fundamental changes to business models with the emergence of a future of cheap and abundant electricity?
Yeah, hi, thank you, Annie, and wonderful to see old friends and new friends here. Look, it's pretty straightforward. I mean, Kingsmill and I have been exchanging notes on this for, I mean, honestly, years. It's happening. It's all around us, and I see it on the ground. in all the countries that we do business in, because so we are developing assets, renewable energy assets in Japan, South Korea, Thailand, the Philippines, Malaysia, Indonesia, Singapore. And what's very clear is that we have become the critical factor to deliver data centers and AI across the entire region, and that the appetite for them is basically insatiable. And so it's pretty straightforward that if you can secure the land, sort out some of the logistics and the issues with delivering that power, you are the best power and the cheapest power for the entire construct above you. And I'm not even talking about any other sector. I mean, just that sector alone. You know, you see announcements of people that want to do $1.5 trillion of investments in data centers, say, or AI. But in fact, there is no data center and there is no AI without an enormous amount of renewable energy. And therefore, we see that effectively making very rapid progress on the ground. But it's going to take us 2 to 3 years to show the results of that progress, because it takes time to actually connect the thing and then turn it on.
Thank you, Assaad. Insatiable appetite is really my keyword from this, and it's super exciting to see what your insights from your perspective on the ground are. And I really want to now address my next question to take a more China-focused perspective to Mui Yang, who is Senior Energy Analyst at Ember, focusing on China's clean energy transition. And Mui, following up on this, like China is definitely at the forefront of this global electrotech revolution. This insatiable appetite is definitely there. How is this changing daily life? What's behind this success story? How does the government view this strategic shift to electrotech?
Okay, thanks, Annie. And I'm so glad to offer my take on China, building on Kingsmill's terrific presentation. And I think you asked 3 questions: how far China's clean energy revolution has gone, and how it is changing daily life, and what is driving the progress. And let me take them in that order. First, the progress. I think if there's one area that China can claim global leadership without dispute, it is in the scale of clean energy deployment. I just want to share with you some statistics. And in China, there are about $625 billion were invested in clean energy last year. And this was more than any other countries and almost double the 2015 levels. And you can already see the impact on the power generation mix. And last year, wind and solar supplied roughly 18% of China's total electricity, twice this share just 5 years early, and this was up from just 4% in 2015. And if we look at this thing from a provincial level, some provinces are moving even faster. I think 7 of them, especially in the resource-rich region, they already have more than a quarter of all their electricity coming from wind and solar, and that is well above the OECD average. But China's transition isn't just about piling up turbines and the panels. It is also about building the whole energy system. And if we look at this, let's start with the supply side. China has rolled out large battery project, new pump hydro storage, and many more ultra high voltage transmission lines. And these elements are all essential to move clean electricity across a continental sized country and keep it reliable around the clock. And now let's look at the supply side. I think on the supply side, as Kingsmill already mentioned, electrification is spreading fast across transport, buildings, and industry. And by 2030, if I'm not mistaken, electricity made up 32% of final energy use in China, already ahead of US and many major European economies. And now let's talk about the impact of this transition on people's daily life. I think people already feel this shift. And in cities, electric buses, taxis, and the cars are quickly becoming mainstream. And if you stand on a street, and you can really feel that the street become quieter, and those electrified cars are cheaper to operate. And you see, we got more clean sky days. And in northern China, cleaner heating solution and heat pumps are replacing losing coal for heating. And there is now less smoke and more comfort during cold winter days. And on factory floors, equipment is switching from coal to electricity. And this helps improve efficiency and cut local pollutions. And I think the overall result is tangible. And we have quieter commuters and more blue sky days after those smart we observed a couple of years early. And now comes to the third question. What is behind the progress? What is driving it? I'd like to point to three things: long-term planning, be pragmatic, and long-term sustained commitment. I think here it's not only about building more capacity, it's about reconfiguring the whole energy system from supply to transport to how we use energy. So it involves multiple changes across different domains like technology, infrastructure, regulation, investment, finance, and all those things. So to coordinate multiple changes, we need long-term planning. And in China, this has been achieved by something we call the 1+N framework. And this involves one overarching roadmap for achieving the dual carbon goals, and plus a set of sectoral and regional action plans that turn overarching target into step-by-step tasks. So you need to have a long-term plan, and that won't be sufficient. And you need to put that into action. For that, you need to be pragmatic. And in China, the pragmatic approach is often described as build before you break. And because rebuilding a clean energy future is like building a new system, it's like teaching a child to walk. And there will be stumbles. But that's fine. They are not a sign of failure, but they are a sign of progress. But if those missteps are not managed well, and like say you see some supply disruptions or price fluctuations, that can trigger social backlash and undermine the momentum. So what China has been doing is China has kept part of the legacy fossil system, especially coal power, in a stabilizing role. And it's like a training wheel. Coal is no longer there to drive growth of generation and electricity. It's more like something that provides balance and backup, while at the same time the clean new system gaining strength and confidence. And I want to emphasize here that coal power in China is fast approaching a turning point where clean electricity will meet all new demand for electricity and coal power will peak. And this will end the era of more renewable, more coal in China. And now it comes to the most important element in my personal view. It is about the sustained commitment. Yes, there have been lots of discussion and report and study on how we can turn transition into reality. We have, as Kingsmill have already explained, there are technical solutions, and we know we have the plans, and we know what financial instrument or policy mechanism would be needed. But what is often missing is sustained commitment to turn those plans and the technical solutions into action. In China, the case for sustained commitment to action isn't just about environmental. Transition is not perceived only as an environmental imperative. It is perceived as a strategic move. And the fossil fuel growth, I think once China's economic rise is perceived to be increasingly unsustainable, both economically and environmentally. And reliance on exhaust shrinking fossil fuels is is considered as a risky energy security strategy for the long run, even with sizable coal reserves, because China is also the world's largest coal consumer. And at the same time, I think China perceived the chance to overtake on the band and lead in the industries of the future. In many clean technology fields, the world is starting from roughly the same starting lines. If you move first at scale, you shape the market, drive down costs, and lock in the learning. Take together, this will help build future-oriented competitiveness. And with that snapshot of how far China has come and how its transition is changing daily life and what is driving it, I will probably pause here and hand back to Annie to take us forward. Thanks, Annie.
Absolutely. Thanks, Moe. I think you also managed to answer a couple of questions that we've had in the Q&A about grid constraints and how they might hold the clean energy and the Electrotech revolution in China. I think your strategic view and strategic pragmatic approach from China and these two systems approach definitely is. I will come back to this just in case you have some further comments on this, but basically the question is about whether this opens the door for more fossil growth. Now, I really want to change slightly our geographical focus and move from China to Southeast Asia. And I'm delighted to welcome Denita Setiawati, Senior Energy Analyst at Ember, specializing on Southeast Asia's electricity policy. Now, Denita, Southeast Asia is definitely rapidly electrifying, and the Asian region has overtaken the US in electricity share of final consumption, as we saw in Kingsmill's presentation. What about opportunities that are created for the region? How can it harness the full potential of Electrotech?
Thank you, Annie. So I think this is the chance for ASEAN to wake up and smell the coffee. This means harnessing the opportunity from electrification by building more renewables at scale to ensure that it achieves cost competitiveness. So Thailand, for example, has an ambitious EV projections. According to the draft power development plan, the EV demand will constitute to about 20% of total electricity demand by 2037. Singapore is hungry for clean electricity, and the country explores solutions including solar PV, clean electricity import, and others, while Vietnam targets a minimum of 55% renewable share by 2030. So all of these means fossil demand will reduce significantly. So for Southeast Asia, harnessing the full potential of Electrotech, meaning regional collaborations, innovations, and as my colleague Mui has mentioned, sustained commitment to embrace clean technologies and have the awareness that clean technologies equals economic growth. Thank you. Thanks,
Denita. And following up on this, basically, how do you see clean flexibility solutions playing into this as enablers of the integration of variable renewables such as wind and solar and reducing the reliance on fossil fuels?
Yeah, so I think clean flexibility is like the low-hanging fruit in all of these equations, in which that a lot of solutions like solar and batteries and pump hydro and also demand-side responses can be integrated into the whole supply and demand scenario and strategies for Southeast Asia. But if we talk about Southeast Asia, we cannot talk only regionally, right? We have to see country by country basis. And some countries have integrated clean flexibility or recognized clean flexibility solutions in their energy plans, and some countries haven't because they are so rich in renewables, like the Mekong river countries. So we have to explore all solutions that would support this Electrotech revolution.
Thanks, Denita. Now let's move to one particular country. I'm thinking about India. And let's hear from Ruchita Shah, who is energy analyst at Ember, focusing on India's power sector transition. Now, Ruchita, India is a country that is highly dependent on fossil fuel imports, and it has much to gain from becoming an electro-state. Now, how is the government looking to capitalize on this potential? What's the need to build? Like, is there a need to build on India's growth trajectory so far in both solar, batteries, EVs, and other electrotech? How do you see this?
Thank you, Annie. And I think I'll pick and note a point from Kingsmill's presentation that India is on the track in terms of building more renewable energy capacity as well as electrification. Probably renewable energy capacity building is ahead of electrification, but I'll go step by step in renewable energy capacity addition, then electrification, and then what more needs to be done to continue on this trajectory and accelerate. So in terms of when it comes to renewable energy capacity addition, we are at 250 plus gigawatt of non-fossil fuel capacity addition, which is almost 50% of what we wanted to do in 2030. And in generation terms, it is around 22%. So the caveat is we have more to do in terms of increasing the generation share. We are building more capacities, but there is a scope to improve on generation mix. And that also, when we talk about capacity addition, it was a result of prices coming out pretty cheap versus when we talk about a new thermal power plant, which is coming up in India. So specifically when we talk about solar addition, it is almost half of what a new thermal power plant would cost. So it is affordable, it is locally available. So India is building definitely on the resources available at hand to reduce dependence on coal for sure. And the argument remains that solar is not available 24/7 or wind is not available. So that takes us further to building more energy storage capacities. And India has been innovating in terms of how they procure their renewable energy. And they have experimented to combine storage with renewable energy capacities. And even that tariffs are very much competitive with what a thermal power plant is giving at present. So the story in terms of renewable energy capacity addition is pretty much clear, and India needs to keep building on it. But when we come to electrification, we have done efforts in terms of electrifying transport sector. We had FAME scheme. We currently have a PM e-drive scheme, which also includes a focus on electric trucks, which was not included in previous versions. But from two-wheelers, three-wheelers, four-wheelers, now the focus is moving towards heavy vehicles as well. So that's a progress. And just to showcase a number, 8% of total electric vehicles that were sold in 2024, 2025 were electric vehicles. And this number is growing at a fast pace. And the support infrastructure for charging these vehicles is also in focus and is increasingly gaining the focus. In terms of agriculture, because we are pretty much dependent on, as an economy, on agriculture, we are also focusing on moving away from a diesel generator powered irrigation pumps to solar powered irrigation pumps. And through PM Kusum scheme, there are subsidies available for farmers to move ahead and solarize their irrigation needs. And when I come down to industry, and there are multiple avenues for industries to electrify, but one of the key development happened in terms of National Green Hydrogen Mission in 2023. And under the SITE scheme, which is part of a Green Hydrogen Mission in India, the price discovery for ammonia production is almost competitive as gray ammonia production. So the prices have come down to a level where green ammonia is sitting at around say 50 cents per kg. So that is very recent for India, and which is very notable for someone moving from gray to green. And it is very much possible because renewable energy is locally available and it is becoming affordable day by day. So in terms of electrification, the progress is that there's more scope to electrify more. And when it comes down to what more needs to be done to stay on this trajectory or to keep moving forward and accelerate the efforts, first and foremost is to have a robust supply chain, which is supplemented by domestic manufacturing. And India is continuously focusing on domestic manufacturing through production linked incentives that they provide for solar panel manufacturing, battery manufacturing. Then the second one is to continue to build on energy storage. We have viability gap funding as a scheme to put out more battery storage projects. We have green energy corridors for expansion of grids, modernization and strengthening of the grids. We have to continue to build on that because the renewable energy projects probably are far away from the consumers. So to bring it back to consumers, we'll need more grids, which are capable of handling the variability of renewable energy. Then comes demand side flexibility, which is not very common in India at the moment. We are starting off with time of day tariffs, which include solar hours as a focus across consumer categories. So basic infrastructure such as smart meters is required to be deployed rapidly to harness the or operationalize the time of day tariff structures. And we have to move ahead of heavy industries electrification to small and medium industries electrification as well, because they are the ones which struggle the most in terms of financing. So there's more needs to be done in terms of small and medium industries. And to close, skill development, research, and innovation will continue this momentum. They will remain the cornerstones for India to continue their journey towards becoming an electro state.
Thank you, Ruchita. This was super insightful. I'm very cautious of the time. We have about 4 minutes left. So we can allow this webinar to overrun time by around 10 minutes. In case some of you in the audience cannot stay past the official end time of the webinar, I would like to really thank you for joining us today and hope to see you again soon. And there's still a few questions from the Q&A too, which is why we are going to allow this slight overrun. And I think my next question that I'm really burning to ask is towards Assaad. As we were talking about 24/7 renewables and demand-side response, we were touching on a little bit on demand-side flexibility. Now, there is a question from Terence Yu, who asks about AI data centers and how we can optimize their electricity use, for example, by considering solar peaks worldwide. Do you have a take on this very interesting question?
Yeah, I have a take. Don't worry about it. That's kind of my take. I have to, apologies, Annie, I have to go in 3 minutes, but in a nutshell, there are grid constraints everywhere around the world, right? So what you're going to see much more of is you're going to see green, effectively boxes that are circular and self-contained, where you have maybe a backup of a backup link to a grid, but no immediate use of the grid, because it'll all be powered internally through solar and batteries mostly. And in effect, the way the numbers work is these days you can probably build enough solar and enough batteries, right, by supersizing them to actually feed data centers, depending on what type of data centers they are, with what they need in terms of electricity, which is why I said, don't worry about it. I mean, I think the more important point, which is very well addressed in the Ember presentation, is that, after, I don't know, 40,000 years of living energy short, right, we finally figured out how to use the big fusion engine on the top of our head, cheaper than any other source of electricity. And we're about to go into a period where we're going to be energy long, hence the overabundance of energy. And we already have all the tech to find solutions to all these problems. So even congested grids are going to be transcended, because in many cases, we're not going to need them. If you put enough solar on a building and you have enough batteries, right? So scale gives you answers that are actually completely different from what you were used to before. If you can oversize the solar and oversize the battery, to cater literally for that one day a year when there's not a drop of, say, sun, then you're done. So it's just, and then costs are dropping to get us there. I hope that answers the question, but with apologies, I just want to thank everybody for their time and for listening, and I want to thank Ember for having me. I've been devouring these reports, and I just love them.
Thank you, Assaad, so much for joining us and for staying long enough to answer a few of the Q&A questions. I hope to see you again at some of our next webinars.
Yeah, take care. All the best. Bye-bye.
Now, I have a follow-up question for Kingsmill. As we were talking about fusion, we have a question from Max Wootsius, who is asking about the role of nuclear in the electricity system in the future. Kingsmill, what's your take on this?
So I can only say what has been said by many other people before, which is that nuclear is nuclear basically provides around 3,000 terawatt hours of electricity and has been flat for 30 years. 30 years of no growth in this supply. And there are lots of plans to expand nuclear. It might possibly grow to 4,000 or 5,000 from 3. So that hold those numbers in your head. Solar and wind in the meantime have gone from nothing to 5,000 terawatt hours of supply. And the debate is, will there be 40 or 50,000? So, I mean, in very simple terms, solar and wind are an order of magnitude more significant than nuclear. Now, of course, there are specific countries, one thinks of France, for example, where clearly nuclear is extremely important. So we don't want to dismiss it in any way, but the point to me is, nor is nuclear the primary solution. And nobody is suggesting that the future growth is likely to, the majority of the future growth is likely to come out of nuclear. If I may just very briefly address one of the other points made in the same question, which is that allegedly there are all these problems to do with of renewables, of lack of space and negative impact on the environment. Again, I think these are all massively overstated, folks. I mean, you only have to put, as they say, solar on 1% of the land or on the golf courses of the world to provide you with all of the energy you need. So the land constraint issue is true for very specific countries and locations like Korea and Japan and Belgium spring to mind, but for most places and most countries, and certainly for the global story, is absolutely soluble. And then a lot of these other arguments about the damages supposedly done by the mining of minerals for renewables are massively outweighed by the damage done for mining of fossil fuels. And to be clear, you need 2 orders of magnitude more stuff for a fossil fuel system than a renewable system, because you dig renewable minerals out once and then basically you use them forever. You hack 17,000 million tons of fossil fuels out of the ground every year and burn it and then do the same the next year. So, please, enough of this argument that renewables are bad for the environment. They are the only hope we have to avoid the massive impact that fossil fuels have. Let me hand back to you. Thank you, Annie.
Thanks, Kingsmill. An injection of common sense again. Now, let's talk about other sources, because there's a question from Katrin Poseidon about natural gas, whether it will continue to grow. I wanted to ask Ruchita for her perspective, like, what are you seeing in India in terms of the role of natural gas in the power sector there?
So India is largely based on coal. Natural gas or gas-based power generation is very less in numbers, but they are for backstart or whenever there's a requirement, they ramp up very quickly. So that ways it is definitely there, but another way it is also useful for gray hydrogen production. So that remains to be seen how quickly or how we transition from there, because especially in my view, if you are having renewable energy to produce green hydrogen, you would rather prefer doing that instead of focusing on natural gas. So that's all from my side.
Thanks, Ruchita. There's a few more questions still. One of them is very high level, and I think Mui would be a great person to answer this one. It's from Josh Ezekiel, who asks about global carbon pricing and how critical it is to the Electrotech Revolution. So can you tell us very briefly how China carbon pricing is influencing its energy transition? Please be very brief as we are already overrunning by 5 minutes.
Okay, I think that I will just keep it very brief at 2 points. It is difficult to get a well-functioned carbon market in the context of a developing country, including China. Because to get a carbon market running, you need a very strong rules and institution regulations to support it. And I think that's point number one. But I think in China, the carbon market is start to taking shape, and I think it did one thing. It sent a very clear signal to the economic actors that you need to change, because we will gradually extend the carbon market to include all major emitting sectors, and you have to think about your next step to start adapting now, or it will be too late. I think it may not be a perfect economic tools in the context of developing countries, but it is a very powerful policy tools to give the right signal to economic actors to act and to adapt. Annie, you are on mute.
Sorry, thanks, Mui. I just really wanted to go back very briefly to that initial question there was about grid constraints and other challenges that China might be facing in its transition. Can you tell us a couple of sentences on basically just summarize what are the main challenges and how China is addressing them?
Okay, I guess that I will try to be brief. The first challenge, as some of the audience already mentioned, is the grid integration. Because China is building wind and solar at a record level. If I'm not mistaken, China in the first half of 2025, China add more than 200 gigawatts of solar capacity. And this is more than the entire solar fleet of the United States. And of course, the integration pressure has returned. I think that's the first point. The second point is that China is already working on that. And if I'm not mistaken, last year, the National Energy Administration has already announced a plan to fast track some major transmission lines. And later in the year, a more detailed action plan has been announced and is now put into action. And because of that, and we have seen some emerging outcomes. And if you look at the curtailment this year, it is on the rise, but still much lower than what we observed around 2015, which was the worst period when we have massive wind and solar got curtailed back to that time. I think the second challenge I want to add here is how to manage structured decline of coal power, because this is not only about closing a couple coal-fired power plants. It's about the flow-on impact on the entire coal electricity ecosystem that include coal mining companies, logistic companies, coal chemical firms, and service providers, and many other people that are dependent on this ecosystem. And how to manage that would be critical as China's transition goes deeper. And I will pause here, and thanks, Annie.
Thank you, Mui. And we are almost at the 10 minutes we had allowed to overrun with this webinar. So I think we can conclude here. And I hope that our audience enjoyed this webinar and found some interesting insights from it. You have a link to the slide deck posted in the chat. You can also find it on our website. And really, I want to sincerely thank all of our speakers, including those who already had to leave, for their really exciting and interesting insights today. And thank you all very much for making this webinar so interesting. Thank you very much, and see you next time, everyone.
Thanks, folks.